Is ZScaler stock a buy after fiscal 2023 second quarter earnings results came out? I'm going to answer that question in this video after I do a review of its latest quarter earnings results. So let's get into the earnings review and then I'll answer the question if the stock is a buy. So revenue increased for the cybersecurity company by 52% to 387.6 million. Net loss improved to 57.5 million compared to a net loss of 100.4 million in the same quarter last year. I really like to see that. If you're going to grow revenue, make progress on profitability if you're not already profitable. Deferred revenue grew by 46% to 1.1 billion. What deferred revenue means is that these are contracts that the company has already signed and it just needs to fulfill those orders, right? So this is an accounting requirement. Think about it this way. If you sign up to a magazine subscription, an annual magazine subscription that sends you one magazine every month, and you paid $12 for that magazine subscription for the year, the company will recognize $1 in revenue in the first month, and then it will recognize $11 of deferred revenue. And then every month, $1 will come out of deferred revenue and will go into actual revenue. So the company cannot recognize actual revenue until it fulfills the service that it was contracted to fulfill, right? Whether it be a magazine subscription or cybersecurity services, right? So deferred revenue is a forward-looking indicator into what Zscaler's revenue will look like over the next few months, over the next few quarters, because these are contracts already signed. It's just a matter of Zscaler fulfilling the obligation. Management said, even in this difficult macroeconomic environment, we continue to see customers consolidate multiple point products onto our integrated zero trust security platform for better security and lower cost. Now, I will point out that I follow a lot of cybersecurity companies, and all of them are highlighting the fact that their clients are consolidating to their services, right? So this has been the big theme for the last 3 quarters, I would say. In every conference call that I listen to, the big theme is consolidation, right? Companies are going from, let's say they have three cybersecurity providers with, one service here and one service here and one service here. They're consolidating it and picking one of those three companies and sending all three of the services to that one company. So with every company seemingly telling us that they're consolidating, I wonder who is losing out, because I'm not seeing a company that's saying we missed out on revenue because our client chose to consolidate with someone else. So that that remains to be seen what's going on in the cybersecurity industry, what clients, what enterprises are thinking about this, and how they're integrating these services into one. The good news is for these cybersecurity providers is that the industry overall is growing quickly, right? Cybersecurity is going from a, oh, that's nice to have, to now it's a must have, right? You're hearing about hacks, cybersecurity hacks proliferating and all over the world. So companies are needing to secure better security for their data, for their payment systems, for all of their services. They can't have their websites go down. They can't have their payment systems go down. They can't lose their payment information, their customers' payments information. So it's become critical, and that's good news for all of the providers in this industry, Zscaler included. And by the way, I love their name for their platform, Zero Trust Security Platform. I like that. It just says we're not going to trust anybody or anything. We're going to protect from all sides. I like that in a security name. Um, the next thing is cash flow from operations of 89.5 million improved from 43.3 million year over year. So cash flow from operations, very nice improvement, and it also improved in terms of percentage of sales. So you look at in the most recent quarter, cash flow from operations was 23% of sales. In the same quarter last year, it was only 19% of sales. So this speaks to, again, what I talked about earlier, in that with revenue growing, the company is showing progress in terms of profitability and cash flow from operations. I like to see that. What I don't like to see is when companies just try to chase after growth and chase after sales, and it's coming at the expense of their profits and their cash flow. So it's like this: revenue is growing this way, but then their profits are going down and their cash flow is going down, right? So they're growing revenue, but that it's coming at the expense of profits and cash flow. And I don't like to see that as an investor. Me personally, I don't like to invest in companies like that, because it shows me that management is not prudently looking after the money the business has been given. They're just taking whatever money they have, they're using it to go out and capture sales, and that's making the sustainability of the business even worse. And I know it's only going to be a matter of time before they have to come back to investors and say, can you please give us more money? Or go into the bank and say, please give us more money. We're losing a lot of money, but look, we're growing so fast, right? And so I don't like companies like that. I like companies that show progress, just like Zscaler is here, improving profitability, even though it's negative, and then improving cash flow from operations. And then even free cash flow margin improved to 16% in Q2. This was up from 12% in Q2 of the year before. So in four of their critical metrics, the company has shown very nice progress, very nice improvement. So overall, performance-wise, the company delivered an excellent quarter. And you might ask, well, why was the stock down if the company delivered an excellent quarter? And that has a lot to do with the fact that Zscaler stock is already expensive. And so investors are already expecting really, really good performance from this company. And if it delivers something that's less than stellar, the stock price comes down like it did in this quarter after this quarter's results. So that doesn't speak to the actual performance, right? The actual performance was really good. It's just that investors have gotten spoiled with Zscaler, already expecting the company to deliver excellent results, but investors may have gotten ahead of themselves, expecting far too much from the company. This is already a really good quarter, just judging by the fundamental improvements. The company's forecasting third quarter revenue of 397 million, so a quarter over quarter improvement and solid continuation of the trends that it's already experiencing. So to answer the question, is Zscaler stock a buy after these spectacular results? I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. I'm going to say no, it's not a buy. And it speaks to what I mentioned a little bit ago. The stock is already expensive. It's trading at a price to free cash flow over 70 and a price to forward earnings over 70. Those are expensive valuations that price in this excellent growth, and this excellent growth for the next year and 2 and 3 years, right? So the valuation already is pricing in excellent growth over the next 2 to 3 years. And so I don't like to invest in those situations where the valuation has gotten ahead of itself. Even though the company is excellent, I would put this company on my list and wait for a pullback, a significant pullback in the stock price before I would consider buying it. But I would certainly be attracted to this company because of its excellent performance. However, I would not pay this premium valuation for it. This premium is too high, it's too rich for my blood. I know some investors don't mind paying these expensive valuations. That's not my style. I like to pay a reasonable price for growth, not any price for growth. Okay, so that's all I've got for this video. As always, I truly appreciate your viewership. I know there's a lot you could be doing with your time, but you chose to watch this video, and I really appreciate it. By the way, if you like this video, I'm going to link to two videos that I think you will also appreciate. So go ahead and click on one of those, and I'll see you over there.